Real estate investment, loan closing costs, part 3. Get ready because it's time to raise the stakes with real estate. In a prior presentation, we looked at closing costs in detail. Now we're going to be listing out the closing costs just simply in alphabetical order. In a prior presentation, we looked at the first half of that list in a bit more detail. We will now continue on with the second half of the list in a bit more detail, noting that as we look at these closing costs, the closing costs will vary depending on your circumstances, your lender, and your location. So you want to think about what they are going to be applied to you in your particular circumstances. These will be definitional terms. We're going to be referencing Investopedia, which is a place that you can go to further your research when looking at investment terms and definitions. So we have types of fees and closing costs. All of the closing costs should be itemized on your loan estimate and closing disclosure. Some standard fees are. This will simply be a list in alphabetical order, which we will expand on the second half of in a bit more detail. So we have the application fee, attorney fee, closing fee, courier fee, credit report fee, escrow deposit. Then we have the FHA, mortgage insurance premiums, flood determination and monitoring fee, homeowners association transfer fee, homeowners insurance, lender's title insurance, lead-based paint inspection, points, owner's title insurance, followed by the origination fee, pest inspection, prepaid daily interest charges, private mortgage insurance or PMI, property appraisal fee, property taxes, rate lock fee, followed by real estate commissions, recording fee, survey fee, tax monitoring, tax status research fee, title search fee, transfer tax, underwriting fees, VA funding fee. So we'll go over the second half of that list in a bit more detail, taking a look at the origination fee. So the origination fee is the origination charge covers the lender's administrative costs to process your fee and is typically 1% of the loan amount. So processing fee, some lenders do not charge origination fees, but if they don't, they usually charge a higher interest rate to cover costs. So notice there you can do some comparison, contrasting, shopping, and look at that interchange between those two. Pest inspection. Pest inspection, this is a fee that covers the cost of professional pest inspection for termites, dry rot, and other pest-related damage. Some states and some government insured loans require the inspection. So this could be dependent on the requirements in your specific circumstances. Prepaid daily interest charges, a payment to cover any pro rata interest on your mortgage that will accrue from the date of closing until the date of your first mortgage payment. So that accrual period could be a fee here. So the private mortgage insurance or PMI, if your down payment is less than 20%, your lender could require a PMI, and you may have to make the first month's PMI payment at closing. So that will be dependent on your circumstances there to see if you have the private mortgage insurance. Then we have the property appraisal fee. This is a required fee paid to a professional home appraisal company to assess the home's fair market value used to determine your loan to value LTV ratio. We have the property tax. At closing, expect to pay any pro rata property taxes that are due from the date of closing to the end of the tax year. Notice again that appraisal could be important. These appraisals could be important, of course, because of the fees that they could result from the appraisals. And notice that when you're dealing with property taxes, that will also possibly be based on some kind of appraisal process in terms of the charging of the property tax, dependent on where you are located and how the property tax is conducted in that location. So we have the rate lock fee. This is a fee charged by the lender for guaranteeing you a certain interest rate, locking in for a limited period of time, typically from the time you receive pre-approval until closing. It can run from 0.25 to 0.5%. Once again, 0.25 to 0.5%, 0.25 to 0.5% of your loan value. Through some lenders offer a rate lock for free. So you might do some comparison shopping there. Real estate commissions. Buyers typically don't pay this fee, so it's usually not on the buyer side, on the seller side. The commission charged by a broker is often 5 to 6%, which can be significant, obviously, when you're looking at properties that are substantial in dollar amount for individuals. So 5 to 6% of the home's gross purchase price which is then split evenly between the seller's agent and the buyer's agent. So it's useful to know how that kind of works, because that also gives you an idea of what the incentives are when you're with some of the people, the agents that you're going to be dealing with. And remember that whenever you're going through this process and you have an agent that's working on your behalf, there's always an agency problem. The agency problem being that although they're working on your behalf, they have their own benefits they're looking into as well. So it's useful to know what their incentives are, so that might bias their decision-making process as they're looking at their incentives, whether they're doing it intentionally or unintentionally. And then that could also help you to look elsewhere, possibly, to get third-party advice that doesn't have an agency problem, possibly paying someone like a CPA or a friend that isn't directly related to the transaction, doesn't have a vested interest in you completing the transaction, in order to look at some of this comparison shopping and get a clear-minded third-party opinion about it. These fees can, however, be negotiated at times to make a deal happen. We have the recording fee, may be charged by your local recording office, usually a city or county clerk's office, for the official processing of public land records, such as simply the process of recording. The survey fee, a fee charged by a surveying company to check property lines and shared fences to confirm the property's boundaries. So you got to, of course, make sure that your boundaries are set, so no one's kind of infringing on your property, or you're not encroaching on someone else's. So we got the tax monitoring and tax status research fee. This third-party fee is to keep tabs on your property tax payments and to notify your lender of any issues with your property tax payments, like late or failed payments. The cost charged depending on where you live and the company your lender employs. We have the title search fee, so obviously that's going to be important. A fee charged by the title company to analyze public property records for any ownership discrepancies. So we want to make sure that they got the title search, so it's going to be important, so we know what the ownership line is going to be. Fees for that. The title company searches deed records and ensures that no outstanding ownership disputes or liens exist on the property. We've got the transfer tax. A transfer tax may be levied depending on the jurisdiction when the title is handed over from the seller to the buyer. The cost varies geographically, so that could be by circumstance and location. Underwriting fees. They are charged by the lender for the work that goes into evaluating your application and approving your loan. So basically, the cost of the approval and loan process and whatnot. Underwriting is the research process of verifying your financial, income, employment, and credit information for final loan approval.